Gang in studio, as we had talked about in the previous section, Mr. Nicholas Geraghty, straight out of Moorhead, the OG of mortgage lenders. How are you, my friend?
I'm doing well. How are you, Eric?
I'm great. Thanks. No Shave November is over, and yet your beard is still thick and
very
luscious.
long, right? Yeah. Yep. This is about as thick and luscious as my beard gets. So, yeah.
Nick, you have every attempt of facial hair, and it's a good thing we're on radio right now because
I like how you call it attempt, because that's kind of what it is. Yeah.
It is just fantastic. I love that you're still sticking with it, man. I love a guy who's determined to grow a beard.
One day.
In fact, JJ in our department here grew a beard for all of November as well, and it was one of the more disgusting things I've ever seen. Yeah, it's just I've proudly owned a beard for years now, just trying to hide my chins is really what it comes down to.
There you go. It's a good disguise. I like it. Yeah.
Nick, tell us about you. Tell us what you do.
Yeah, absolutely. Mortgage lender, like you said, originate from Moorhead. I live in Fargo now, so Fargo-Moorhead is where I've been all my life. Mm-hmm. If it ain't broke, don't fix it.
That's right.
And yeah, working for Ownership Mortgage here again locally, helping people buy, refi, do it all. Just help people not only have people like you guys in Hatch that find the perfect home, but it's also very important to find the perfect payment, in my opinion, because you don't want to be house poor. You want to make sure that you're, living your life, being able to enjoy it, and how that payment fits into your budget, figuring that budget out. I'm very passionate about that because I think that is something that can be ignored when you're house shopping, but I think is extremely important.
Now, if people are going to refi, because we can talk about buying all the time, but buying means like a huge family move.
Absolutely.
Buying is 100% emotional with a little bit of logic sprinkled in there.
Definitely is.
Right? People will choose to buy because of life or death. And real estate in general is life or death. We're talking new job, new family, new spouse, new city, new opportunity, new wealth, or a loss of any of those, right?
Yeah,
that's what real estate is around, and that's what compels you to buy or to sell.
Most definitely.
But I want to talk logic here because there's people out there who own homes, and maybe, just maybe, they have an opportunity and they don't realize it.
Oh, absolutely. Especially right now, this year, refinances are something that's very often overlooked. But you could be sitting right now, just because of where rates are, being near their all-time lows, you could be sitting able to cut your payment by $200, $300, $400 a month, especially if you bought your first home a couple of years ago. And now we can eliminate that mortgage insurance you maybe have, cut your rate at the same time, and maybe do it for absolutely nothing out of your pocket as well. All we're doing is refinancing, cutting your rate, and cutting your payments. Absolutely. Why not? That's going to give you more free money to plan your budget otherwise, save up quicker, retire earlier. So,
Nick, I have to tell you the call I got. I got a call from a friend of mine for the last 25 years.
Yep.
And he doesn't live in Fargo, but he had called me and he said, Hatch, I want to talk to you. I'm refining and I've been working with this online company.
Sure.
And I'm ready to sign the deal. He called me on a Saturday. He was ready to sign all the papers and commit to it on a Wednesday.
Okay.
Here's what he told me, Nick. He told me he was on an FHA loan and was moving to a conventional loan. They were trying to get his mortgage insurance off of there.
Love it.
And they gave him a rate of 4.375, and then his closing costs were $8,000. The value of his house is $250,000.
Okay.
Was he getting swindled?
That's pretty expensive for closing costs. Yeah, absolutely.
And a stupid high rate, isn't it?
Yeah, it is. Because right now rates are sitting around that 3.5, 3.75 amount.
I mean, it changes every day, and it depends on your credit score and all that. So
Yeah.
we're not going to preach here and say that this is the interest rate that you get. So I lined him up, and I'm like, dude, you got to talk to somebody else. And I knew somebody that he talked to, and within 24 hours, he had to revamp and change his entire plan, canceled with that online company, and now moved with somebody who was local, somebody who got him the rate that he should, cut his closing costs down by about 200%.
I don't doubt it.
Right?
Yeah.
Closing costs went from $8,000 down to like $2,000 or so, and that's an origination fee, and and then he was able to take this other debt as well and put it in. So the first point I want to make is this. if you're thinking about refinancing, you got to get a couple of opinions. Wouldn't you say?
100%. And I'm transparent about that even when I'm talking to my potential clients or repeat clients. It's important to get in front of somebody, see their whites of their eyes and have them actually explain your options. It's so easy today to go online, to just click what's most convenient or what pops up first. And, even if you're not serious about shopping, you click once here, you're going to get 100 calls from those online companies, and they might talk you into something you think is your only option. But when it comes to refinances, there's so many different things to put on the table you should discuss.
So Nick, who should refinance? And the answer is not everybody.
Correct.
Who should refinance? What are some of those key points that you look at that would say this financially makes sense?
Yeah, the first thing I look at is obviously the most upfront and obvious. It's what's your rate. If you bought a couple years ago or even last year, your rate's probably 4.5 and up. So look
and
at what your
that's
rate
over
is.
a 30-year mortgage. We're talking 4.5%.
Correct. Yes, thank you.
Over a 30-year mortgage, and right now, I've always heard that you should look to take off about 1 full percentage point on your rate if you're going to think about refinancing. Is that
if you can? That's upfront. That if you can cut 1%, it's probably going to be a pretty clear case that refinance might be good for you. But the second thing I look at is when did you buy, and can we cut your mortgage insurance off your payment?
Talk to us about mortgage insurance.
Absolutely,
that's an important one.
Yep, mortgage insurance is what I call a necessary evil. It's not necessarily evil because I like the fact that you can get into a home without 20% down. So a lot of mortgages you can do 3%, 5%, or even maybe 0% down. But the lender's going to have to take a little bit higher of a risk by doing that, so they get mortgage insurance.
So they're insuring their risk.
Exactly, that's what
mortgage.
it is. That's what it is. Yep, and that can cost you, if you're putting a minimum down payment down, $200,000 house, that can be costing you $150, $200 a month potentially. So just cutting that out alone can save you $200 a month or $2,400 a year.
You're looking at the interest rate. You're looking at mortgage insurance. Here's what I think is the big the big opportunistic thing, right? Other debt.
Amen.
Okay. If you have equity in your home, and if you can lock in with Nick a rate of 3.5, 3.75, somewhere in that range, take a look at what your credit card debt is. Take a look at your automobile debt, student loan debt. You should be refinancing that and getting that under a 3.5%, especially with the Bank of North Dakota if you live in North Dakota.
I got that myself. Yep, absolutely.
And so you should look at this other debt that you're carrying. You can bundle all that together in a 30-year mortgage and take the equity that you have in your house, still lower your payment, and rid yourself of all those extra debts.
Preach. Amen. I love it.
Nick, it's huge, isn't it? Because you find people will say, I can't afford X, Y, or Z because they're paying $300 here and $200 here and $200 here and then $1,000 here. And so they're $1,700 in, and you can put those $1,700 a month in payments and put them in a refi and be like $1,200 a month.
Absolutely. And that's one of the things I preach the most too, is just cash flow. What do you have coming in every month? What do you have going out every month? And then number one way to save is getting a net positive on the cash flow. And so if you're, like you said, I've helped a ton of people who have refinanced, like you said, either kept the same payment or even lowered it and paid off that 20% interest credit card that's just been nagging them for the past 3, 4, 5 years plus.
That you make the minimum payment and your
you're not going anywhere.
Goes up.
Right. Yeah. You see the balance go up after you make a $200, $300 payment. That's awful.
Nick, we are on the cusp right now. Big opportunity for people to refinance.
Absolutely.
Of course, we want to encourage people to buy and sell if it's emotionally right for them. We're talking logic here, and I think that the logic of all this says that you need to talk to Nick and at least start finding out your options to figure out is refinancing right for you. So Nick, how do people get in contact with you?
Absolutely. So you can contact me. My email is just nick@ownershipmortgage.com, or you can go to ownershipmortgage.com. Just go to the contact us. We'll get a hold of you if you find us there. But nick@ownershipmortgage.com is my email.
Man, folks, get on the horn, get on the email, start chatting with Nick and find out what your options are. The worst case scenario is you find out that it's not right for you. And the best case scenario is you are bathing in money. So.
That's right. Yeah. We'll hope for the latter. Yeah.
That's right. Folks, we're going to go to break. Nick, thanks for being in studio. And in the meantime, check out hatchrealty.com. This is Real Estate Radio with Erik Hatch.